Thanks for checking out this video on cash leaks. Many people don't even know cash leaks exist or that there's ways to plug those cash leaks, saving you hundreds of dollars a month, thousands of dollars a year, and even hundreds of thousands over the term of the loan. I'm Jared McBride, your loan guide to saving you money on your next home loan. Cash leaks come in all shapes and sizes, and today I'm going to talk about five. This is broken. I'm going to talk about five today: interest rate, term of the loan, MIP, PMI, and declared homestead exemption. I'll just talk about five today. The first cash leak we're going to talk about is interest rate. Generally speaking, the lower the interest rate, the lower the monthly payment. Interest rates change all the time, sometimes multiple times a day. So there may be a lower interest rate now that you qualify for than when you originally got your loan. And that could save you a lot of money. For example, let's take a look at Charlie and Lucy. Now, Charlie and Lucy are made up, but these numbers are real. Charlie and Lucy called me to see if they could save any money. So we took a look at their mortgage statement, and here's what we found. That back in 2004, when they got their original loan, it was for $500,000, 6% interest for 30 years. Their payment was about $3,000 a month. So in 10 years, they'd paid off $100,000 of the loan. The rate we talked about that was available for them was about 4% for a 20-year loan. The new payment on that would be $2,425. That means they would be saving $575 every month by lowering their interest rate. That's some big savings. A monthly savings of $575 each and every month is an annual savings of almost $7,000 and a total savings of $137,000 over the next 20 years. What would you do with that money? Charlie and Lucy looked at each other and they said they could build a serious doghouse for Snoopy. But then they asked me if they could save even more per month. That brings me to my second cash leak, the term of the loan, meaning how long it would take to pay it back. We ran the numbers on a 30-year loan and found Lucy and Charlie could save almost $1,100 per month off their mortgage payment. So their payment would go from $3,000 a month down to $1,910 per month. So they have two great options for saving money. The first option is choosing a 20-year loan. They could save $575 per month, $7,000 per year, $137,000 over the term of the loan. That's option one. The second option would be to take a 30-year loan and save $1,100 per month every month until they paid the loan off. Which one would you choose? Would you choose the greater savings over the life of the loan, or would you choose the greater savings every single month? Charlie and Lucy chose to save the most money possible per month. So their new loan, the payment was $1,100 less than their previous loan. They plugged two cash leaks, interest rate and term of loan. $1,100 a month, that's a lot of savings. Now let's talk about the third and fourth cash leak. One of the easiest cash leaks fixes I've seen lately is eliminating MIP and PMI. MIP goes with FHA government loans, PMI goes with conventional loans. Now they each have their own detailed rules, but the principle is the same. PMI and MIP are needed if you don't have 20% down, and they can both cost you hundreds of dollars per month. In this made-up scenario, we'll take a look at how much Lois and Clark can save by eliminating MIP. And while we're at it, we'll look at changing their interest rate, making that lower, and changing the terms of their loan too. Lois and Clark called me to see if they could save money by getting a new home loan. Lois and Clark told me that they bought their first home about 3 years ago. It was $250,000, and they only had to put 3.5% down. Isn't that great? That their current interest rate was about 4%, and it was a 30-year loan. Their monthly payment for principal and interest was $1,200 per month. The cash leak that jumped out was their MIP, $282 a month, every month, and they would have to pay it for the next 27 years. Every month. In order to completely eliminate MIP, they had to have 20% equity in their home. Lois and Clark were very fortunate because their home has experienced significant appreciation over the last 3 years. It's very likely that their home would appraise for over $300,000 because of the recent sales in their neighborhood. With a value like that, they have more than 20% equity and they can eliminate MIP. A new loan without MIP at 4% would save them about $360 a month. The new payment would be about $1,100 a month. So the significant savings comes from eliminating MIP. A monthly savings of $360 per month equals an annual savings of almost $4,000 a year, and a lifetime savings of $135,000 over the next 27 years. What would you do with that kind of money? So Lois and Clark also wanted to see how much they could save by paying the loan off faster. So with that 15-year loan, 3.25%, their payment went up about $170 a month. Now, why would they want to pay more on their payment per month? By increasing their payment $170 per month, not only do they pay off their loan 13 years earlier, but they save $235,000 by getting rid of MIP, reducing the interest rate, and shortening the term of their loan. 3 cash leaks wiped out in 1 new loan. Now they have 2 great options. The first one is they save $360 per month, $4,000 a year, $135,000 over the next 27 years. The second option, their payment goes up $170, but they cut 13 years off of their home loan and save $235,000. Which of those options would you pick? Clark and Lois were more concerned with paying off their loan faster and saving more over the long run of the loan. They also cut 13 years off of their mortgage, so they got to go to the Fortress of Solitude 13 years earlier. How cool is that? Cash leak number 5. A common cash leak I see is not having a declared homestead exemption. That's an exemption specifically filed on your primary residence, meaning the house you live in. For a small fee, you can file a declared homestead exemption. Without getting into too many specifics, the declared homestead exemption entitles homeowners to greater legal protection. It may have significant financial benefit in the future should the need arise. The financial benefit could be from $75,000 to $175,000. These are just a few examples of how we can save you money by plugging these cash leaks. How much could you save? Find your mortgage statement and then call me. 858-752-3461. Let's find out how much money you can save. Give me a call today. 858-752-3461. Testing 1, 2, 3, 2, 1. Ah! Testing the mic. Ah, la la la. Hi ho, Kermit the Frog here. Cash leaks come in all shapes and sizes. And today I'm going to talk about 5. This thing's broken. 5. These are just a few These are just a few examples of how we can save you money by plugging these cash leaks.